Investing in gold. Gold and other precious metals have been attracting a lot of attention lately. Gold is one of the most compelling opportunities available to investors who are thinking about the current economic environment. In today's economy, there are few sure investments. Given the economic uncertainty, there is a related growing demand for gold and other precious metals. This is to protect wealth through the expected turbulent times ahead. Looking back, it's a tragedy what happened to so many people in 2007 and 8 as the stock market and housing markets collapsed. But there's one thing that we learned clearly during that time. That is, putting all of your eggs in one basket is a mistake. Diversification of investments holds powerful benefits. It's a good time to begin diversifying investment or retirement portfolios and putting some money into investments that have been trusted and safe throughout history. Gold has long been a trusted form of money and a store of wealth. When you look at the massive money printing by the Fed over the past many years, many people worry about the future value of the dollar. The ultimate dollar hedge investment will always be gold. Investing in gold through ownership of the metal itself, mutual funds, or gold mining stocks provides the most direct counter to the dollar. As the dollar falls, gold will inevitably rise over time. Real estate values that were once a safe haven can collapse along with the stock market. One bright spot is in the financial world is gold. Even when the economy is good, gold bars are usually a stable, liquid investment. The many qualities of gold are even more of a valuable asset in rough economic climates. Let's look at the topics we'll review in this presentation. First, we'll look at physical gold, the exchange traded funds, the ETF. We'll look at stocks, and we'll look at the options market. The world economy may long be off the gold standard, but ultimately the tangible value of gold as the basis for real value will never change. Historically, this has always been the case, and it always will be. In other words, we are on a gold standard in spite of the popularity of fiat currency. Fiat currency, such as today's dollar, is backed by nothing other than the force of the state to declare the dollar legal tender. There is nothing else other than that and confidence backing up today's dollar. Making an investment in physical gold might be confusing to many people, as there are many companies offering assistance to help you buy gold. If you would like to own gold or another precious metal, it is easy to purchase physical gold or another precious metal, but it is difficult to know who to work with and which companies are most trustworthy and reputable. The companies listed on the site shown below, simplegoldIRArollover.com, lead the market for providing gold to the individual buyer. Give that a look. Now, physical gold. There is nothing like gold bullion, which is the ultimate expression of pure value. Historically, many civilizations have recognized the permanence of gold's value. Great wars have been fought, for among other reasons, to pillage stores of gold. Why the allure? The answer. Gold is the only real money. Government might be able to manipulate the gold markets and the gold price for a while, such as is happening these days, but those manipulations don't last. Gold rises to its true value over time. Gold's value will rise based on the forces of supply and demand. The big disadvantage to owning gold is that it tends to trade with a wide spread between bid and ask prices. So don't expect to turn a fast profit. You'll buy at retail and sell at wholesale, so you'll need a big price jump just to break even. However, you should not view gold as a speculative asset, but as a defensive asset for long-term holding value. Since your dollars are going to fall in value, gold is the best place to preserve long-term value. The best form of gold ownership are through minted coins such as the 1-ounce South African Krugerrands, the Canadian Maple Leafs, or American Eagles. With gold dealers, you never go into the transaction without a plan, just as you wouldn't go to a car dealership clueless about the type of car you want. If you are unprepared, you'll run the risk of making a purchase you will regret. Do the basic research. For example, know the difference between bullion and collector coins, as well as the way that gold bars are weighed and priced. Knowing what you are interested in buying and the general price levels to expect will prevent you from succumbing to a scam. Talk to more than one dealer. Buy a larger gold bar if you can. Kilo gold bars weigh 1,000 grams or just over 32 troy ounces. This bar is the most traded of all gold bars because of its low premium and convenient size. It is typically much too expensive for a regular person to invest in. Kilo gold bars are traded by investors and owned by governments. 10-ounce gold bars are named for their weight and are typically bought in large quantities by investors. 10-ounce gold bars can be difficult to liquidate. The 1-ounce gold bar is a very popular form to hold gold. 1-ounce gold coins and 1-ounce gold bars are different in shape, but gold bars are much cheaper than gold coins in general. Gold biscuits that have stamped images are most novelty items with different designs based on the country from which you purchase the gold. The dealer charges a premium that is usually smaller as the size of the individual bar gets larger. That means that several small bars can end up costing you more than a larger bar. With that in mind, buy as large a bar as you can afford. Prepare a secure storage place for your gold. You can't just sit it in a corner or put it on a bookshelf. Have a safe place to store the gold once purchased. Consult your bank ahead of time to see if they can store gold bars. Ask about the highest weight allowed for safe deposit box and the cost of purchasing insurance for various gold bar weights. Purchase a fireproof safe for your home and choose a hiding spot. A safe or safety deposit box in a bank are both great options. You can also ask your gold dealer about independent depositories that charge a storage fee. The price you choose should protect the gold bars from fire and theft. Find a dealer. Search the internet for online dealers or scout the local markets or shop around at different dealers to determine whose prices are the best. Now, looking at exchange-traded funds. The recent explosion in exchange-traded funds, or ETFs as they are called, presents an even more interesting way to invest in gold. An ETF is a type of mutual fund that trades on a stock exchange like an ordinary stock. The ETF's exact portfolio is fixed in advance and does not change. The two gold ETFs that trade in the United States are both hold gold bullion as their one and only asset. You can locate these two ETFs under the symbol GLD for the Street Tracks Gold Trust or IAU for the iShares COMEX Gold Trust. Either ETF offers a practical way to hold gold as an investment. There is also Swiss physical gold with the ticker symbol SGOL. Because it trades like a stock, an ETF does not have its net asset value calculated every day like a mutual fund does. By owning an ETF, you get the diversification of an index fund as well as the ability to sell short, buy on margin, or purchase as little as one share. Another advantage of an ETF is that the expense ratios for most ETFs are lower than those of the average mutual fund. When buying and selling ETFs, you have to pay the same commission to your broker as you pay on a regular order. Now, looking at stocks. One option is to invest in the junior gold stocks. This level of stock is more speculative. Junior stocks are less likely to own productive mines and may be exploration plays with higher potential profits but also with greater risk of loss. Their capitalization is likely to be smaller than the capitalization of the senior gold stocks. This range of investments is for investors whose risk tolerance is higher and for those who accept the possibility of losses in exchange for the potential for triple-digit gains. There are also gold mutual funds for people who are hesitant to invest in physical gold but still desire some exposure to the precious metal. Gold mutual funds provide a helpful alternative. These funds hold portfolios of gold stocks, that is, the stocks of companies like Newmont Mining that mine for gold. Newmont is an example of a senior gold stock. A senior is a large, well-capitalized company that has been around several years and has a profitable track record. Newmont Mining Corporation is primarily a gold producer, with significant assets or operations in the United States, Australia, Peru, Indonesia, New Zealand, and Mexico. Founded in 1921 and publicly traded since 1925, Newmont is one of the world's largest gold producers and is the only gold company included in the S&P 500 index. For many investors, selection of such a company is a more moderate or conservative play. If you are new to investing in physical precious metals, it is very helpful to find a company that provides a comprehensive guide for making this sort of investment. You can get an investment guide to help you get started. Visit the website below, simplegoldirarollover.com, where a number of companies are listed, many of whom provide an investment guide to be of assistance to you. Another option for investing in gold is to look at the options market. For the more sophisticated and experienced investor, options allow you to speculate in gold prices. In the options market, you can speculate on price movements in either direction. If you buy a call, you are hoping prices will rise. When you buy a put, you expect the price to fall. Buying options is risky, and more people lose than win. In fact, about 3/4 of all options bought expire worthless. The options market is complex and requires experience and understanding. To generalize, options possess two key traits, one bad and one good. The good trait is that they enable an investor to control a large investment with a small amount of money. The bad trait is that options expire within a fixed period of time. Anyone investing in options needs to understand all of the risks before they buy. The futures market is far too complex for the vast majority of investors. Even experienced option investors recognize the high-risk nature of the futures market. Considering the range of ways to get into the gold market, futures trading is the most complex, and while big fortunes could be made, they can also be lost in an instant. In summary, when selecting a gold investment, it is important to make sure you work with a company that has maintained an A+ rating from the Better Business Bureau and a AAA rating from the Business Consumer Alliance. Apart from this, the company should also have a 5-star customer service rating from TrustLink. Quality customer care from a highly rated company makes it that much easier to invest in gold. Gold and other precious metals are a long-term investment. Many people are opting to set up gold IRAs to hold gold for the long term. Other precious metals can also be placed in such an IRA. Finding the right company to handle your precious metals, such as gold, is very important. Not all companies are the same. Some provide great service and others do not. Take the time to find the trustworthy and reliable company to help you through the process of investing in gold. To learn more, see the site listed below, simplegoldirarollover.com. It's a great site with plenty of good information. Give it a look.